Veuger. I am the chair of the Washington, D.C. chapter of the Netherland-America Foundation, the NAF. The NAF is celebrating this year our 100th year of strengthening the bonds between the United States and the Netherlands through educational exchanges for Dutch and American students and scholars, by sponsoring cultural exchanges, and by fostering business ties between the two countries. Today's webinar is one in a series of occasional talks and lectures we host on business, cultural, and historical topics. Our next webinar will be held on October 15th on the lasting legacy of Eleanor Roosevelt. The webinar will feature Ambassador Joka Brandt and historian Elida Black. To make this work possible, we ask for your support. And please consider becoming a member or donating. If you'd like to learn more about the NAF or our various chapters, please go to thenaf.org. That is THENAF.org, where you can also become a member or donate. With that, let us get started on today's topic. I'm delighted to welcome Peter Veru. Today we'll be discussing the role Dutch investors played in financing the sovereign debt of the early United States. As many of you will know, the early American Republic was united under the Articles of Confederation and had limited ability to raise tax revenue. As it struggled to meet its debt obligations, Dutch investors played a crucial role in providing the young state with the financial resources it needed. In today's webinar, Peter will discuss his research on how Dutch bankers helped stabilize the public finances of the early United States and explain how the Dutch financial community saw America's future at the time. With that, let me introduce Peter, but before that, let me also let everyone know that you can submit questions. I will see them. You can type them into the Q&A tab, and I will select them and pose these questions to Peter if they are good and interesting enough. So try your best. But with that, let's go to Peter. Peter Veru is a historian who specializes in the Dutch era of American sovereign finance, the late 18th century. His work has been published in Financial History Review and New Research in Economic History. Prior to his career as a historian, he was a high-yield bond trader at Bear Stearns and Toronto Dominion Bank, and the founder, manager, principal songwriter, second guitarist, and bouzouki player of the band Feather Merchants. He received a PhD in history from the University of Colorado in Boulder, from where he joins us today, and a master's in history from the George Washington University here in the District of Columbia, from where I welcome you all. Peter, thank you so much for doing this. Thank you for joining us. Thank you for your excellent work on this fascinating topic. I want to get our conversation started by asking you to tell our listeners, how did you come to study this topic and this era in American history?
Well, thank you, first of all, for the opportunity to speak about my work. It's very important to get the word out about this. But I had this experience, as you say, on Wall Street for 17 years as an institutional junk bond trader. Little did I realize I would ever be using that again when I got into academia. About, I guess, 9 years ago, I was in a diplomatic history seminar, and towards the end of the seminar, these things all work the same way. You do a bunch of reading, you write papers on what you read, and then you do your own research topic. All of what PhD is to prepare you to write a dissertation and then a book. So you have all of these mini exercises, and you have to discuss with the professor, what do you want to do? And he said, well, what are you going to be doing on your dissertation? I was like, well, I've done a lot of work in the Dutch, because I'm from the area. I'm from the New York City area, and I knew about the New Amsterdam period. I've done a lot of work in the American Revolution. So he, scratches his beard for a second, and he says, I always wanted to know about these Dutch loans in the 1780s. So I said, all right, I'll look into it. And upon reading all the secondary research meaning books written about the subject by other people, I realized that most of the people doing this work really had very little idea of what they were looking at. They were simply reporting the news. They did not have the other tools to do the analysis. But as a former bond trader, I did. So I wrote this up, the diplomatic history professor loved it. And I took the paper to my advisor, Fred Anderson, at the University of Colorado. Again, he's one of the great colonial historians of his generation. He just retired. And he looked at it and he said, Pete, I think you're onto something here. I think this could really work. Only thing is, you're going to have to learn Dutch and move to the Netherlands for a couple of years. So I'll see you in 2016. And that was pretty much how it happened. Next thing I knew, I was on the, exchanging emails with the University of Amsterdam to see if they wanted to support the work through student visa, put me on, as a researcher, let me use the library, whatever. And I met Joost Jonker, and he said, absolutely, come on over. And that was the beginning of it. So I spent a year learning Dutch and then another year in the archives. And I think that's an important distinction. Most of the Americans that have been over there, if they spent 2 weeks or a month in the archives, that was a lot. I spent a year over there. I went in and saw the Bering archives in London. I went to France and poked around those archives to see what was around. And then I came back and I wrote it up as my dissertation. And as you point out, I got 2 articles published from it, which is pretty good for a first-time historian. And then I'm presently writing a book. I've got a book proposal that's ready to go out. And I'm now here with you discussing the work.
That's right. Well, excellent. So for people who are interested in reading the articles you mentioned, they were just published in July and last month. I'm happy to share the specifics with anyone who wants to reach out.
Yes, and if they give you their email or me their email, I'll happily forward a PDF of both articles.
I think both are very interesting. I think for people who are even remotely interested in this in this period.
Yes.
But so that sets the stage. Sovereign bonds, late 18th century.
Yeah.
It may be helpful, I think, if you walk us through a little bit the situation of American public finance at the time.
Okay.
Right. So what was the issue? Why why did Dutch bankers come into play here? Why, what's going on in Europe? Why did the U.S. need this fund?
Right. Well, that's a great question. The British did not want any money in their colonies. Money meaning the Dutch guilder, the Spanish piastre, the French livre. Their feeling was, you have to buy goods from us anyway. Why don't we just buy them on credit? You just buy them on credit and you'll ship raw materials to us to settle those accounts. The Navigation Act stopped the Dutch, the French, the Spanish, the Portuguese, the Swedes, and the Russians from trading with England's colonies. So any activities that that were happening around England were illegal. So there was just no silver in the country. So when war breaks out, the American Revolution was hardly a fair fight. If it were a race, the Americans would have been starting 25 yards behind the starting line. Thankfully, our Dutch friends in St. Eustatius had a vibrant gunpowder trade going, and they were willing to take tobacco and corn and whatever we had to sell them in exchange. Everyone knows the story of the first salute. That kept the war going for quite a long time, at least when we needed them. Now, in 1780, the United States was a bankrupt country. The IOUs that they had passed out to farmers and soldiers and widows and orphans were trading at 25 cents on the dollar. In fact, they weren't even paying interest. The interest was being issued as a separate bond, and of course, a secondary market developed for them too. So in 1780, John Adams got thrown out of France. The French deemed him too independent for their liking. They expected to control the situation at the negotiating table. And Adams had grown to distrust the French, although he knew that we needed them, the United States needed them. And he went to the United Provinces, the country that's now called the Kingdom of the Netherlands. And he did 2 things. First, he wanted to borrow money so that the United States can remove their dependency on France. The second thing, but to do that first, the country had to recognize the Americans, which wasn't going to happen until the British were out of the fight, until the British publicly acknowledged that they could no longer continue the war. So while this war is being fought, John Adams begins what you could only define as an investor relations offensive in the Dutch press. This is what makes the United Provinces different from every country in Europe at the time. Their most radical part of their society was also their wealthiest. The Patriots, they were incredibly wealthy. The stadtholder didn't want John Adams showing up in Amsterdam. That's the last thing he wanted. But he was powerless to stop them because Adams's allies wanted him there. And as you know, the Dutch had the United Provinces had the most vibrant press in the world. It was the world's clearinghouse for news.
So Peter, just so people don't get confused, when you say patriots here, you mean the Dutch patriots who were
Dutch patriot
trying to push reforms along the lines of sort of the spirit of the French Revolution.
That's right. The Patriotenteit, the other side being the Orangist party, the party of England and the stadtholder. So Adams goes there and he begins an investor relations offensive, anticipating that eventually they're going to get recognition. So basically what he does is he creates a new American. Ben Franklin is walking around Paris wearing a mink hat, unshaved, unbarbered. He looks like Rousseau. People are calling him a Quaker. He's not correcting them. But the Dutch didn't want to see that. They had been Republicans since the 16th century. That wasn't some novelty to them as it was to the French. What they wanted to know was, what do these people believe in? Are they for freedom of speech? Are they for freedom of religion? Are they for Republican government? Because all we see around here are monarchies. We're surrounded by them. What kind of systems of finance do they use? Do they have banks? What do they think about other than farming? Are they interested in philosophy? Are they interested in science? So Adams carefully constructs this new American for the Dutch press. And what ends up happening is in January of 83, I guess, or 82, it starts appearing in the Dutch newspaper that the North government in England is in trouble and that they're going to fail. And that is the end of the American Revolution. The stadtholder, not wanting to be last in line to form a trade agreement with the United States, he recognizes America, and the United States hires these two Dutch brothers, Jacob and Nicolaas von Staphorst, who are both patriot bankers. The banking system was delineated along political lines at this time, which I found fascinating. And they're both revolutionaries. So at any point in our story, while they're trying to raise money for the United States, they're also trying to get their own leader kicked out of office. And at any time during this story, they could get shot, arrested, or chased out of the country. And a little hint, one of those things happens to both of them.
So one question we just got from Richard Dijkema is, and I think this is good to clarify, he asks, what percentage of the total funds the Continental Congress had to work with was borrowed from sources in the Netherlands, right? And so there, I think the timeline you should clarify a little bit, because the money from the Netherlands only starts flowing
in 1782. Yeah. So they bring the first deal, and important, these are not commercial banks. These are investment banks. Their pipeline is to a group of patriot, Republican-minded investors that are called rentiers, from the French rentier. And basically what they do is they live off the income. Their fathers, grandfathers, and great-grandfathers made their fortune financing trade to Indonesia, which is a lot riskier. These guys are taking the money and lending it to foreign governments. And they're like, I don't need to make 20% on my return. 6%, 5%, that's fine. I'm fine with that. And they are able to get a deal done in 1783, although to fully fill the deal, which was for 2 million guilders, it took 3 years, but they were able to get some money. And then in 1784, they do another deal and they raise another 2 million guilders. And what this money is doing is it's keeping the United States out of default. And by the way, the new money they're borrowing is simply being used to pay the interest on the old money.
Yeah, so
No revenue.
much of this was accumulated debt from
That's
the
right.
revolution.
So the United States isn't using Dutch money to finance the war. They're using it to finance the Confederation era until the political process, which is to get people to support a strong federal government with the right to levy taxes. Until that happens, somebody has to keep things going. And that is what the Dutch did. That's at least part of the service that they did. So it's not so much that they financed the war, they financed the afterwar period. And ultimately, they're going to take out the French. And all that money that was owed to France is now going to be in the hands, much safer hands, of a bunch of Dutch retail investors.
Excellent. So that puts us in a good spot, I think, to get a little more into the detail of what's going on in the Netherlands, right? So some money has been raised, some of the debt has been taken over by Dutch investors instead of French investors, but the U.S. is still struggling to really raise tax revenue. It's still under the Articles of Confederation.
Right.
John Adams has carried out his marketing efforts.
And he was successful, but he also was wearing on the two von Staphorst brothers.
And so now tell us, so the two von Staphorst brothers, right? So now they've taken on these obligations and they're ideologically committed, but obviously do not want to lose their investments.
That's right.
And so what are they? And they become concerned at a given moment.
Yes, they have become concerned because John Adams has not been fulsome with information about what's going on in the United States. And the von Staphorsts are finding out what's going on through, and this is a totally American story, through an American fugitive named Daniel Parker, who owes some very important people back in the United States about $150,000. And let me just tell you, when we say $150,000, we mean in Dutch piasters, not Dutch, Spanish piasters. That's the standard piece of 8, the silver coin. $150,000. Let me tell you how much that is. When John Paul Jones presented his first budget for the U.S. Navy, the flagship was $150,000. Basically, it was the most amount of money you could spend on a man-made object. There wasn't even a mansion in the entire United States that cost a third of that.
Yeah, more like the cost of an aircraft carrier.
Yeah, exactly. Basically, it was the cost of an aircraft carrier.
And so sorry to jump in, but so Mr. Parker, he's going to answer the question we just got from Michiel van Schadenburg, who asks, why were the Dutch willing to fund the U.S. at face value when local debt was trading at 25 cents in the dollar?
Exactly. Well, the reason is because they didn't know. They didn't know until they met Daniel Parker that the debt was trading. And then again, weren't they surprised to hear from them that the U.S. domestic debt was trading at 25 cents on the dollar? And why hadn't John Adams informed them? John Adams was a diplomat. He was also the head of finance in Europe. And frankly, he just acted like a diplomat. He kept everything to himself. Anything that was embarrassing to the United States, he kept quiet. Anything that was positive for the United States, he wore on his forehead and walked around town. So they're starting to figure out that John Adams is not helping them, that he's putting them in a potentially embarrassing situation. Now, here's what Parker tells them to answer the question that you have. Here's what Parker tells them. He says, naturally, the export in the United States, he's not talking about reforming the government. He's not talking about levying taxes. He says the natural increase of exports in the United States will make these bonds go up in value. He's talking about the 6% loan office notes that are trading at 25 cents on the dollar, and the 3% interest payment, which is trading at 15 cents on the dollar. He's not saying to them, the Americans are going to get their political act together. They're going to have a system of taxation. All he's telling them is that the natural increase of exports from the United States is going to attract capital to the United States, and that's going to make the loan office notes go up. And the von Staphorsts, who had already done 2 deals, they said, well, this is kind of like a self-fulfilling prophecy. We have to bring these loan office notes into parity with the primary market, and that has a number. Actually, it's 75 cents on the dollar, or 8%, and they begin the process of buying up these loan office notes.
So Peter, here may be a good moment to clarify a little bit what's going on for people with less of a background in finance. So a question we just got, and I think that sets it up nicely. Susan Dijkstra asks, how did the interest rates charged by the Dutch compare to normal rates at the time? That is, what premium was charged for what was an unproven borrower at best, right? And so here, the fact that all these bonds were trading at a steep discount, I think, comes into play. Important.
Yeah, that's a great question, and I have this information. I so rarely get to use it, so it's great. The way it worked was the more risk, the more fees you had to pay. So in 1787, the United States had to admit to their bankers that we cannot pay the interest payments on the 1784 bond, which we borrowed to pay the interest on the 1782 bond. So once they divulged that to the von Staphorst and their sales force and their other co-managers, the fee went from 5% to 10%. So you get a situation where the United States is penalized because they haven't gotten their financial house in order. So while they may be borrowing at 6%, it's actually higher, like 6.5%, because they can't pay the interest, and that's the penalty. So that is what happened. It's a great question.
Very good. So now back to the von Staphorsts. So they realize, okay, we have a problem. There's all this domestic debt circulating, and why would, and that's obviously eventually people are going to realize that what we hold is not, worth what we paid for it. And
eventually, the people that are willing to lend the money at 6% are going to realize that they can get paid 25% by buying a domestic loan. So something has to change. We've already raised money for these guys, so we can't get out of the two deals we did. So the best thing to do is to jump into the domestic loan office market. What they did was they had their chief salesman, a man named Peter Stadnitsky, write the first research report ever written on American sovereign finance, which I translated and wrote an article about. And that translation basically convinced a bunch of Dutch investors to buy these investment trusts that were made of American loan office notes. So the first thing they did was they cleared out Europe. They cleared out Europe of all the domestic loan office notes that were in Europe. These were loyalists had gotten them, things like that. They somehow found their way to Europe, and they just went around and bought all of them up. But and these investment trusts sold out so fast, they said, okay, our Dutch investors are going to buy these bonds. Let's just sell them as much as we can until the price of the domestic loan office notes rises, and then we'll sell them the primary market offerings that we're going to use to take out the French debt. So this is a coordinated three-piece moving. And
so people were willing to buy up the domestic notes because they had been convinced that prospects for the United States were stronger than people were assuming.
Yeah,
so Michiel just followed up and he said, I guess doing due diligence is not so easy in a period of imperfect information, and that's really what's going on here, right?
That's pretty much what's going on. That's
you get much wider disparities of how people assess what's going on.
That is right. Once Stadnitsky's report came out, these loan office notes start selling as part of investment trusts. It's not that and then the von Staphorst put together a group. It's called the House of Four. But let me return back to what Stadnitsky's saying in his report. What he's telling them, simply put, is this is a Republican country, meaning they're not going to have any problem getting people who are seeking freedom of press, freedom of conscience, freedom of religion to come to the United States. That is going to increase their productivity. The national debt to these Republican Americans, they're going to see that as a binding thing. By the way, that's what Alexander Hamilton said too. He said we got to have a national debt because it'll bind these states. He's telling them that of course, the Dutch had their New Amsterdam experience. They knew about the natural resources there. That was never in question. Their only real question was who was managing those resources. That's why they needed to know who the Continental Congress was. So, and all that stuff's happening. And once
it's funny to read the report because it feels like propaganda, but then, right when you go through it, but then turns out to have been right.
It was 100% right. Exactly. It wasn't propaganda at all. It was a fairly rosy representation of what was going on. And the truth is, from 1782 to 1786, had the Dutch, the von Stockhorst brothers, really understood what was going on in America, they probably would have never come near us, because things were bad. The political situation was only getting worse. And yet they stepped in and really kind of, saved the Confederation era from, it could have gotten very, very bad for the United States had they not stepped in. Now, once they get the European bonds of domestic loan office notes, they form this consortium called the House of Four. They send their buying agent, a clandestine buying agent, because if anybody finds out the Dutch are buying these bonds, no one will sell. He goes to Philadelphia with bags of Dutch guilders, and they begin an aggressive buying program, long story short, that drives the bonds from 40 to 125.
So this part confused me a little bit, because
yes,
if a central part of their plan is to drive up the price of these bonds,
really, so to buy up as much as they can
beforehand. Yeah, yes. That's right. Okay.
Right. Their plan isn't to drive the market up. Their plan is to buy up as much as they can, and by driving the market up, they'll prepare the soil for what's coming in 1790.
Right. So it's two separate operations, really. That's
really three, because at the time this is going on, France is considering selling their stake in American bonds, which was set off by the von Stockhorst, although they didn't realize what they were doing. So there's three things going on. There's the domestic loan office note buy program. There's the negotiation for France's bonds. And there's this thing in the distance, this massive refinancing of French debt, which has to happen. And when I say it's big, it's, they ended up borrowing like 10, 12 million guilders. So all these three, it's a coordinated ballet. And the von Stockhorst are the ones that are basically pulling the strings on the marionettes.
Can you give us a sense of how much money we're talking about here, sort of relative to the budget of the United States at the time, or relative to tax revenue?
Well, there is no tax revenue. That's the problem. Everything.
Well, there's some excise.
Before the Constitution is ratified, the states are required to make contributions, of which they only made 25% of their contributions. And frankly, many of these states were trying to starve the Continental Congress, the Confederation Congress, out of existence. They thought of it as a wartime expediency, which is ridiculous, because you can live as a Georgian, a Marylander, and a Connecticutian all you want, but you borrowed as Americans. You have to pay the French back, or we would be having this conversation in French if they had not, because they would have certainly invaded the country. They would have halted our shipping until every penny was paid back, especially heading into the French Revolution, especially with their own problems as bad as they were. So yeah, they come over. Theophile Casanova begins an aggressive buy program.
Is that his real name?
Yeah. Do you know the investment bank, that Casanova and Company?
Yeah, that's a good name.
Investment bank. He's a cousin of that investment banking firm, and the Americans. It was believed before I did this. It was believed that it was American speculators that were driving the loan office note market. They weren't. It's not that they didn't believe in the loan office notes. It's just that they were fully invested and they had no money. They needed Dutch money to make all this work. And while they're doing this, it's spurring the American economy. Best way I can put this: think of the American economy in 1783 as a pile of perfectly cured wood that, once lit on fire, will burn for the next 300 years. Now imagine that it's been raining since 1776. Something has to dry the wood out before it can catch fire. The drying agent is specie. As the specie comes in, now normally, how would we know if the specie were coming? We'd look at the money supply number, but there's no money supply numbers at this time. But what we have the second best thing, the price of the loan office notes. So as the price of the loan office notes goes up, the cost of doing business goes down, because there's more money in the country, and people looked at the yield of sovereign debt to determine the interest rate of other economic activities. So in 1790, all of this Dutch money, or late 1789, it kicks off the first peacetime expansion of the American economy in U.S. history. That's how much money went into the American economy from the Netherlands.
Yes, and really a key element here is that is the ideological alignment to some extent, right? Because that
absolutely
really it's what drives a lot of the optimism about the prospect.
Yeah, these are Republican brothers on the other side of the Atlantic. Of course, we want to help them. I mean, we're surrounded by people who hate us, and the Dutch Republic, as everyone listening to this call knows, at this time, it's basically sinking and it's losing its independence. It's a small country. It no longer has the big economic advantages that it has. And England and France would still love to get in there and loot the place, which is exactly what the French did after the French Revolution.
And so can you tell us a little bit about how Stadnitsky, so he writes up his investment report. How does that get circulated? How did that work back in the day?
Well, I only found one copy in the entire country. And it was, beautifully bound book, self-published by Stadnitsky. The way it all happened, bookstores. There were a higher percentage of bookstores in the entire United Provinces than there were in the most well-read province of France. This is a highly literate country. Women had a 60% literacy rate in the United Provinces, way higher than the rest of Europe. And it was just, the word got around, and people started reading these things, and they were like, wow, this is great. I'm going to throw some money on this.
Nice. And so the buy up the domestic notes.
Yes.
Then what happens next? So now the von Staphorsts and their allies or their investors basically control.
They are
a majority or a large majority of.
They are the drivers of the domestic loan office note market starting in 1788, 89. They're driving the domestic loan office note market. And in fact, Théophile Cazeneuve drove the price up 50 points in a week once, because he realized, and this is not unusual, he realized that there was very little for sale at these low prices. It was just like a quoted market, when in truth, there really wasn't that much. So he pushed the pricing up. Let me see what I can scare out from there. And of course, the Americans are looking at this and they're like, wow, things are going well. The price of the loan office notes is, in a sense, a litmus test for optimism in the United States.
And this goes back to Michiel's earlier question too, right? There's no central clearing, and so you don't really know what's available at what prices.
Most of these transactions are taking place in the back room of taverns until this great refinancing happens, between restructuring and refinancing between 1790 and 1794. Then a bunch of guys go down to the buttonwood tree at the end of Wall Street and say, we've got to be able to manage this because this is getting to be too much. We have to start establishing some sort of practice, some sort of ethics to get this done. And they signed the charter that became the New York Stock Exchange.
Very nice.
Because of all of this.
Well, that's outstanding. But so now U.S. no longer struggling to fund its debt as much, because what this all meant was that the von Staphorsts and other European investors could safely continue to.
Okay, well, in 1790, what happens is, with this, mid 1790, all the event risk in the United States is gone. It's now a real country.
The Constitution is in place.
Constitution's in place.
Government.
There's a professionalized system of finance run by Hamilton the Wonderkin, and he's thinking, I'm going to take out all of this state debt and I'm going to assume it under the federal debt, but I have to get a moratorium on the French debt first. So he writes a letter to Lafayette. He says, can you get me a 2-year moratorium? This, to me, cinches the deal that if it weren't for the Dutch, Hamilton's plan, the assumption plan, would have never happened, because they had to pay France back first before they could take $27 million in new debt onto their balance sheet. So what Hamilton doesn't realize is that the market has already sprinted ahead of his plans. There isn't going to be a trade of French debt to French speculators, American speculators who are trying to buy it. In fact, it's going to be a refinancing. So while Hamilton puts out his assumption plan,
and this is because all this French debt had been.
Well, what happened was the Dutch demonstrated to the French that they didn't need to sell their debt, that a refinancing was coming. There was a big market for American debt in the United Provinces. And then they begin the process of refinancing French debt. And let me tell you exactly how good of a job they did. When they priced the first deal for 6 million guilders, it sold out in an hour and a half at 5%. The last deal they did to refinance the French debt, which was the last offering they were going to do, was also priced at 5% and took 8.5 months to sell out. They basically, right before the French invaded the country, they concluded this massive transfer of debt from the French to Dutch rentiers. And I think I should point this out too. The ability to invest in American debt by these Dutch investors is the first opportunity they ever had to invest in something that wasn't European. If you wanted to, I'm sure you could buy mortgage notes in the Caribbean or something, but if you wanted the sovereign debt of Spain, England, Sweden, Denmark, Russia, yeah, you could get that. But every time somebody coughs the wrong way, a war breaks out. So
yeah, this is why the East and West Indian Company.
Right. So there's this huge Atlantic Ocean between us and all of Europe's problems, and these guys will be able to grow unfettered. And in fact, they're just going to attract more people. More wars break out. More people are like, forget this. Let's go to the United States. It was an opportunity like that too. They could get money out of Europe by doing this.
And so now, at that point, what has happened is basically these investors have provided bridge financing between the end of the Revolutionary War.
That's what I would call it too. Yes.
And the enactment of the Constitution, and then the consolidation of U.S. state and federal debt.
That's right.
And then, ironically, as you point out, a couple of years later, France invades and conquers the Netherlands.
Yes.
And
they were invited. The Dutch merchants paid them 80 million guilders to invade the country.
Certainly by a faction. Yeah.
Yeah. And by the way, Nicholas von Staphorst, this is to tell you exactly, in 1787, during the first Patriot Revolution, Jacob von Staphorst, his house was raided and he was found to be caching weapons for Patriot rebels. So he was chased out into France. In 1794, when France is...
And this is one of the two von Staphorst brothers.
One of the two. The second von Staphorst brother, the elder brother, Nicholas, in 1794, writes a memorial, has it published to the stadtholder telling him, if you bring in English troops to defend the United Provinces from France, I'll personally finance a revolution against you. That did not go over well. And Nicholas von Staphorst was chased into Prussia. So these guys are not walking around polite Dutch society while shoveling out bags of cash to wild-eyed revolutionaries out a back door. They are the revolutionaries. They don't really care who knows.
But then ironically, after their initial allies invade, 15 years later, the Netherlands becomes a kingdom.
That's right. That's right.
And permanently, exactly. Or 10 years later, first under Napoleon's.
Right. Exactly. It's like, exactly right. So if you're going to identify the sovereign era of American finance, the Dutch era of American sovereign finance, for my dissertation, I called it from 1780 to 1794. Truth is, it goes to 1803 with the financing of the Louisiana Purchase, because most of the financial talent that structured that deal all cut their teeth in Amsterdam, including Henry Hope, Francis Baring, all of these guys, they all cut their teeth in Amsterdam. So they went into England, and this deal comes around. They're like, yeah, I mean, the England can come up with the cash as a bridge loan, but we have no experience in selling American debt in the United Provinces. Well, let's find the von Staphorsts. Von Staphorsts are dead. Nicholas died in 1801. Jacob retired, but their co-managers, the Willinks, they're still alive. Let's bring them into the deal because they have experience. Nobody in England had any experience in selling American debt to Englishmen, much less Dutchmen. So they bring in the Willinks, and the Willinks end up being the big co-manager, and they're the ones that sell the note to Dutch investors in 1803. So that's the swan song. After that, things usually, as you pointed out, becomes a kingdom. Their influence begins to wane. But truth is, if you were going to identify the Dutch era of American sovereign finance, it would be 1780 to 1803.
And so this swan song, as you call it, that's why you visited the Barings archives.
Yes, that is why. And boy, did I find some interesting information there.
So now let's go back to the other side of the ocean, though. So Netherlands' role is, I think, clear, and that then peters out. Of course, in the U.S., then Hamilton, I guess, famously consolidates the state debts from the Revolutionary War with the federal debt. Can you talk a little bit about can you walk us through how that?
Well, once that was announced, by the way, Theophile Casanova. This is going to sound incredibly fantastical. It would be fantastical in modern age, but Theophile Casanova is having direct conversations with Alexander Hamilton, and Alexander Hamilton is giving him what I would call non-public information. Certainly today would be non-public information about what's going on, because Hamilton's not acting like the Treasury Secretary. He's acting like the CIO of an investment company, of a regular corporation. He's marketing the United States to these Dutchmen, and he's selling them on this because he knows that we need them. Guys like Jefferson, by the way, tried to stop all this. He's like, we can't have foreigners buying up all of our debt. And Hamilton's response to that was, well, do you have $20 million in your pocket? Because we're broke. I don't know if you know this, but your country's broke. All this money you're spending in Europe, that's just going on our tab. We have to pay this eventually. So in that regard, he is telling Theophile Casanova, there is going to be assumption. So, there is? Let me go and start buying the state debt. So they start buying up the state debt too. Again, pumping more money into the American economy, driving the price up of the state debt. This is what's going on. So he is coordinating with Theophile Casanova. There's no other way to say it, because he knows that there isn't enough money in the United States to make this process happen on its own. And by the way, there are no other Dutch people around the world. There's no replacement for these Dutch rentiers. The Italian states aren't going to do it. France is careening into, heading towards revolution. War is coming to Europe. This is not the time to be getting people to invest in bonds. So in that regard, he understands, I can't act like I got to give these people information because I need them.
Yeah, and just to clarify for viewers, the reason why this is so important for the broader economy is because the U.S. is still on everyone is still on the gold standard or something close to it, and so you need the physical investment of specie to have an economy that functions and to
right. And
to
when
keep the money
Hamilton
supply
does
from contracting,
right. And when Hamilton does this massive restructuring, what he's doing is taking this former drag on the economy, these loan office notes at low values, and he's turned them into an interest-bearing medium of exchange because the United States needs money. So, now the farmer who's got $1,000 note that's worth $1,000, he can now go to his bank and say, look, I want to borrow some money, make improvements on my farm. I want to buy more land. And the guy will say, well, what do you have to put up for collateral? Well, how about this loan office note? Oh, okay. That sounds pretty good to me. So now this is actionable money. This is moving money. The velocity of it increases, and it's starting to exchange because of this, medium of exchange. And of course, from 1790 to 1796 or 94, I think, I don't know exactly the end of the date, you got this huge economic boom in the United States.
That's very good. So that's where it all. And so before we finish up here, I know that you're working on a book on the
I am, sir. Yes.
on this period. And so I wanted to ask you to talk about that a little bit. What are there additional things you're looking into? I think we've gotten a good sense of the broad narrative, but anything you can tell us, I think would be of interest.
My favorite part, and only really favorite to a bond trader, is really not going to be that interesting to anybody else, I guess. But the issue is from 1794, when that last deal was done, to say 1801, all of the entire Europe's bond markets collapsed. So if you're thinking in terms of price, in 1794 would be one end of the horseshoe, of an upside down horseshoe. I don't know what right side up is for.
Unclear what the upside is. Yeah.
And then you have you have this huge dip, and then the other side is 1801, and down here is bad times. This is basically the interest rate environment during the French Revolution. What I have done is, when the last time I was in Amsterdam, I went under Joost Jonker's guidance, and I filmed all the price courants from, say, 1796 to 1803. And I'm currently constructing yield charts for all of this stuff, so we can basically map out what the interest rate environment was during the French Revolution and show exactly what a great job these von Stopphorst did. But to show you that basically there's a decoupling between the European capital markets and the American capital markets. And all this money from the Netherlands is now in the United States, and it's doing its thing while Europe is shooting at each other.
I see. And so interest rates are spiking in continental
Europe, but not in the United States, right? Exactly. Although I haven't exactly proven that yet. I haven't proven to the extent that it happened, but I'm almost just basically eyeballing it. I can tell you that things did not go down nearly as much in the United States as they did in Europe. So anybody investing in American bonds, they basically insulated themselves from European financial disruption. That's the missing chapter in this. Doing the Louisiana Purchase, that's pretty simple. And I see it as just a reprise of some of the deals they were doing in the 1780s. Okay. The refinancing, I touched on that in my dissertation. The refinancing and the restructuring, I touched on that in the dissertation. But the real fun part's going to be from 1794 to 1803, which was not covered in my dissertation. And there's also something, I'm having the House of Four's diary, Theophile Casanova's diary, translated into English. Now, here's the problem. It wasn't written in Dutch. It was written in French by a German scribe who wrote in 1/16 of an inch French cursive. So the reason it hasn't been translated before is good reason. Yeah, it's it's going to be expensive, but I have a friend who's French who lives in Jerusalem right now, and she is working on getting this whole thing translated. So that's what the book's all about. My proposal is effectively done, and I'm going to be sending it out to publishers. I've been told that there are people who are going to be interested in this.
Very nice. So one, and this is a little bit later, obviously. I don't know to what extent you have a sense of this, but so now in France invades the Netherlands, you have a bunch of Dutch investors who have these American assets.
Yeah.
How secure were those? So obviously they're secure in the sense that the interest payments are going to get made and the like, but just how did the property claims to the bonds work at the time?
Yeah. I often wondered that. I've often wondered that myself, and I'm not sure I've gotten the answer, other than to say that throughout this time, all of these Dutch people had assigned their power of attorney to an American. So I believe that insulated them from, you mean, what stops the French from just going and taking their bonds, right, invading the bonds? I think that these bonds may have been held in the United States, but I'm not sure about that. And I have thought about that many times. A great question. You know, what would stop the French from just going in and taking all this money, all these bonds? But I'm not sure that they didn't have powers of attorney. I never heard that these people that their bonds were taken from. I'd never read anything that the French just came in and took all their assets. So I don't think it happened. I just don't know why it didn't happen.
I see. Because that also made those American instruments, if they were secure that way, that would have made them super attractive investments during that period in Europe.
Right. Also, and the French didn't want to. If the French had just started raiding people's houses and taking all their securities, people would have sold all of their securities as fast as they could, put it into gold or silver, and left the country, or just taken their bonds and left the country. So they couldn't do that because once they didn't want expertise and capital leaving the country they just conquered. So they also had to be a little bit more. They just went after the merchants. They said, you know, I think they paid them 80 million guilders to invade the country, and then they just started running a tab on them. There's a famous quote from an American, probably second tier founding father. I forgot who it was. It wasn't Gouverneur Morris. It was somebody else who said, yeah, these Dutch people are figuring out that freedom isn't free.
I see.
The Patriot Revolution itself, Simon Schama, you know, he refers to the Patriots as those foolish patriots. It's a movement that historians have really tried to explain and unpack with very, very little success. It seems to have been not a popular movement, but more like a Republican oligarchic movement. But regardless, there was no, there were technically limits on what you could say in the press, but the Dutch fear of centralized power, there was no one in charge of policing it. Nobody wanted to put anybody in charge of policing the press. So you had great freedoms in the Netherlands, but for some of these individuals, it wasn't enough.
Yeah, and then obviously much of that history was then written after an overwhelming Orangist victory, right? So that also probably skews the way in which that movement was.
That's right. That's exactly right. So in 1794, the stadtholder gets chased out. Yeah. The Batavian
Revolution, as we call it.
Batavian Revolution, and the Batavian Republic takes over. And that's something I'm also is going to be more into my book about what the Batavian Republic was, how it affected American finance.
I see. And obviously a number of the people involved on the financial side, as you pointed out earlier, were very active on the political side too.
Exactly. And that I find fascinating. In no other country in Europe is this going on. Yeah, there were poets and publicists in Prussia and Sweden and Denmark, and they can write their cute little poems for the newspaper supporting the Americans. But when the language gets too incendiary, they get a visit from some minister who says, you want to spend the rest of your life in a dungeon? Knock it off. You know, the French were doing the same thing. Thomas Paine's Common Sense was censored heavily when it was published in France. The Declaration of Independence did not get published in its original form in Russia until the American Civil War.
There you go. I don't know, for people who aren't familiar with it, the Constitution of the Batavian Republic is very radical. It's an interesting.
I'd be interested in reading that. I don't think I've even read that. Yeah, I will.
Yeah. Anyway, so we only have a few minutes left here. I don't see any additional questions in the Q&A. But so if there's anything you think we've missed or that you want people to know, now's your chance. Otherwise, I will tell you, thank you so much for doing this. Do not sign out yet. We'll close out the live session.
Right. No. I think we've covered pretty much everything. For us to get any deeper into this, I would have to start showing you charts and yields, and that's more of an academic presentation. I think that would be more difficult here. But again, I'm very grateful for the opportunity to talk about my work.
For sure. Thank you, Peter.
Yep.